All right, we're live, sir.
All right.
See it.
Thank you, Matt.
Of course.
Oh, wait. Hold on. Let me post this. Hold on. That's a lot of numbers here. All right. What's up? What's shaking, everybody? I just had to bury my favorite keyboard. So it's a sad day. Sad day. All right. Let me see. What's up, T? Let's put this full screen here. You guys can hear me okay and everything, right? U.S. Steel up, Beezer Homes up, CC FICO net down. No, net down 27%. I can't be it. Oh man, there were a couple of people who were telling me they were going to play this into earnings. Sound the video good? Okay, thank you. Wow, look at this net. And this thing had a good quarter the last quarter net. Let me see. Yeah, it weren't as bad. Wow. So what else is there? Mohawk. That caught a little sweep today. That's up a little. Skechers down a little. Snap, of course. Snap down every quarter. Okay, Pinterest down. Pinterest, where's that now? That's another one everyone thought off the Facebook number, right? 25. That's nice. Back down to the bottom end of the range. Gilead down a little. Amgen. First Solar. They had earning numbers for Solar. I didn't even know they were reporting today. And Amazon. You know, it's crazy because the names that matter, right, are the names that knock the cover off the board. The names that matter to the indexes. You know, underneath the hood, I mean, let's be honest. This market hasn't looked too good underneath the hood for a while now, anyway, right? Breath-wise and everything else. And it seems to be shaking out that way for earnings. Where's First Solar these days? Because that was red hot. Oh, that's not even down though. That's nothing. Look at this. Look at this move. That's nothing. I mean, there's just, you know, outside of the big guys, there's really nothing that exciting to have a conversation about. Oh, Intel. That was the one I couldn't think of. Intel. That looks flat. Right? Nothing. Nothing. Dots on Google all over the place. All right. Let's talk again. There's not really much of anything new on the stuff we talk about, but a couple of interesting things to keep an eye on. And this kind of was our theme on Sunday for our members only webinar. It's probably a good time, you know, to stick to day trading when and if there are some decent opportunities to try to take advantage of. Again, we just, you know, you're trying to be patient yet active at the same time, so you don't get drawn into the FOMO. This is a market right now that undoubtedly is going to draw a lot of people, I think, on both sides, as we can see. So again, the theme and it's been the theme for a few weeks now as we've gone into earnings season. Try to think intraday. Try to be patient. Wait for opportunities. We'll discuss that a little bit, what it means for me, for you, could mean something different. Um, and kind of let things shake out here because there are a couple things to keep an eye on that may that could possibly open things up in the future. Okay, it's not a given, but depending on which way they turn out, it could possibly lead to more dramatic price action. But as of right now, and again, this is something we've talked about ad nauseum, week in, week out. Um, we are in the same environment. Okay, we're in a range bound market dating all the way back to last summer. So we're coming up to a year now that this market's literally been range bound. Okay, it's going to feel really bullish at times, and people are going to think they're in a full-fledged bull market. And at times, you're going to hear people calling for the crash. You're going to hear about a bank, right? Another banking disaster. Um, some life comes into the VIX. It's amazing, and this is something we discussed, right? The shift and tone, even on a short-term basis, in not sentiment indicators, that too, but more so in just the eyeball test and listening to people around you. The shift in tone and sentiment on a week-to-week basis, on a day-to-day basis, it really is incredible. A day like today, you're gonna have the bulls doing cartwheels all over the place, pounding their chest, right, bragging how they've been calling for bull market and the October lows or whatever the case. And when these banking issues or whatever other issues, I'm sure there's going to be plenty of other things that come around. You're going to have the bears do the same when things feel bearish. When does that come to an end? Is when we actually see something change in the stuff that we look at. Well, we look at it every day, but on this webinar, we look at it every week. No matter, again, that on the bullish side, right? If we're looking for the start of a new bull market, we're looking for those confirmation signals we spoke about, right? New leadership, as far as the flow, which is the main indicator that we follow, we want to see sweeper accumulation in new names, right? That's a telltale sign of the start of a new risk-on bull market. Okay, so you want to see that, right? No matter how bearish, and you guys know I've been skeptical of a lot of bullish moves throughout this, since we topped out, or even going back before we even topped out, right? Because the flow and breadth and everything else has looked horrible at times. But even as skeptical as I am, if I start to see some of those confirmation signals that we talk about continuously, I'm not going to ignore them, right? That's the last thing I want to do. Is you don't want to stick to some thesis or some bias and ignore some of the real signs that are out there. But for me to get excited on any time, this market trades to the top of the range or has an up day led by 4 big name stocks, right, that carry the indices, is foolish, right? And obviously you can get into big trouble if you react and treat it that way. Okay, so I mean, to sum things up, we've come into earnings season here, right? So we know if earnings were going to be better than expected, especially early on, coming from the big guys, because they've rallied a lot of these larger names. There's been a defensive rally crowding in these names. So if earnings were going to be good, okay, there's a good chance the market could hold it together, okay? If the opposite happened, and look what just happened. You had Facebook, Amazon today, Meta. You couldn't get better in a sense, right? I mean, they did exactly what you needed on the bullish side of the equation. Okay, and you still got Apple to come, but that's what you needed for us to kind of stick to the higher end of this range and have this bullish phase continue. Okay, if Meta, excuse my French, but shit the bed. If Google was a disaster, if Amazon today came like a few other quarters over the past year, and they spit it up, there's a good possibility we'd have some weakness, especially with some of the other things going on out there. Some of the positioning things on a more tactical basis that everybody's talking about, right? We'll discuss that in regards to CTAs and systematic funds and all that. We probably have some weakness, but does that mean that we break new lows and we're in crash mode or a new leg down to extend the bear market? Probably not. Probably not. It just will give us an opportunity to trade to the lower end of the range. So it is what it is now. We got some positive reaction from the earnings we have so far. We'll see how the rest of the earnings season goes. I think it did its job here for the moment, and again, we'll see how that shakes out. More importantly, okay, because that stuff you got to wait. You see how things go, and you evaluate as they come in. But a couple things to keep an eye on going forward from here, and I think it's playing into some of the recent price action we've been seeing. Okay, first things first. The reason why we feel that there's going to be we're in a continuation of this range-bound market. Okay, that's putting in a floor in a sense, is because of the defensive bearish positioning that's been lingering for a while now. Okay, the professional side, the pros out there who manage money from hedge funds to fund managers, whatever they are. Okay, financial advisors, the more savvy players in this game that regularly follow this market, they have been cautious, bearish for a long time now. Okay, and that hasn't changed, right? We looked at the fund manager survey from BOVA that comes out every month. Okay, you're at levels that you haven't seen in since the 2008 apocalypse. Okay, and we know things aren't that bad, right? I mean, the problem right now is what a lot of us have expected things to look a lot worse by now. Okay, so it's less bad, if anything. But yet, the professional end of positioning has been extremely cautious. Okay, and you look, even the stuff when they do get long and almost are forced to become bullish because things aren't as bearish, right? The price action on a daily basis not as bearish as they would expect. They're still buying defensive stuff. They're not buying, the risk-on stuff that you usually would look to take advantage of if you were really feeling bullish. Okay, when they started chasing these mega cap tech names, okay, they were buying them, based off a potential run on banks, and you wanted to keep your money in a safe place, right? That sort of thing. They weren't buying them because they think the worst is over as far as earnings are concerned, or the economy, or the Fed, or inflation, and they're positioning for the start of a new bull market, right? So even when they're bullish, they're cautious. So, based on, again, my experience and throughout history, when it's that cautious out there, right? When positioning when they're that underexposed to risk, right? Another thing we spoke about, the money markets, and just the flight to safe haven assets, right? We looked at those charts. When things look that bleak, the majority of the time, that's going to put in a floor, okay? Doesn't necessarily mean, and this is where a lot of people make the mistake, that it means the opposite, right? You look at it as a contrarian, and because they are so underexposed, it's the start of a new bull market, right? Or you get a rip-roaring rally to new highs, okay? No, because we're not in a bull market. What happens is, it puts in a floor. And a common question I know I get, a lot of you guys probably get from family members and friends who ask you about the market in general, the most common question I get is, how's the market holding in so well? Right? That's almost everybody I speak to. That's their first question. Right? How's the market doing so well? Like, why isn't it going lower? And that's because everybody expected it to, right? And the same thing with the economy, right? Everybody, including myself, expected things to look like a complete disaster by this point, right? When we had this conversation and you asked me, but again, I'm clueless, just like anybody else out there. But if you asked me, back last summer, what the economy would look like now, I thought things would be on fire and the Fed would be slashing rates and implementing QE at some point here. All right. And that's obviously hasn't been the case. Not to say the economy's doing well, but it's doing a lot better than everybody anticipated. All right. So again, just bottom line, what that means a lot of times is that it puts in a floor. Okay. Dips will find buyers, okay, based on how underexposed and how bearish a lot of that positioning is. All right, so that has been the case for a while now, and that's the argument that this range, instead of a new leg lower, okay, will continue. Okay, at least until that bearish positioning that we look at, right, those levels and those signals, until they recede a little bit, right? They're not as extreme. They reel in more bulls. People are less bearish for whatever reason. That's usually how it plays out. Okay, and we haven't really seen that materialize yet, right? Like we looked at. I mean, you just had recently money go into safe haven assets aggressively, right? A couple weeks back. Again, this month's BOVA Fund Manager Survey, is basically just a smidge off its worst look that we've seen throughout this bear market. All right, so the likelihood is this continues until that levels out a little bit, and this is right? This is the wild card when you're in this type of environment that we keep talking about. The Fed breaks something significant that's unexpected, okay? In order for us, you can't predict that, right? The Fed can't predict that. Nobody can predict that, right? I just had a whole discussion here with you, telling you guys how wrong I and everybody else was about how bad things would be economically. So no one's going to be able to predict when and if that something major breaks and leads to a credit event, right? Where liquidity dries up, and those type of events is where everything goes out the window. Okay? Doesn't matter how bearish positioning is. Markets sell off until the Fed, the Treasury, whatever it is, react and do something about it. Okay? So until we see one of those two things, right? This bearish positioning on the professional side level off a little bit, or the Fed do some major damage, which, again, the odds and the probability of it, I'm sure, have gone higher because of what the Fed has done, tightening wise. Okay, but there's no way to know what and when that will occur. What we can do is, there are a couple things that we look at on this webinar, right, that will give us a heads up when the smart money out there, right, the credit markets are concerned that the Fed is doing some real damage, right? So, again, on that front, nothing has changed. Nothing has changed, right? And no matter what we want to talk about each week in, week out on these webinars, I know everybody would like to have a new topic. I always start off with that because I think it's the most important topic, the most important message to share with you guys, because it allows you at least to navigate this market with some sanity, right? We spoke about it's not going to make trading easier, right? It's not easy to trade in this environment, okay? It's not a legit risk-on bull market. So you're not going to have, you're not going to have the smooth ride that you would have when you're buying individual names in a new bull market, right? You see what's going on now. You have 4 or 5 mega cap names that are, carrying the load, pushing the indexes higher, right? You could go, you look at an Nvidia or you look at an Apple, and God forbid, you decide to take some risk and hold, right, a net into earnings, right? Because Facebook did well, and you get your head chopped off, right? So it is important to remind yourself what we're dealing with here and keep tabs on the signals that tell us whether this is still what it is, right? So the premise, right, the object of the game here, okay, if we believe we're in a range-bound situation here, right, and we believe that bearish positioning, especially on the pro side, is significant enough where players are going to buy the dip, what we want to do is try to look for opportunities, okay, off any pullbacks, right? That's the most we can do on the long side. The most we can do, okay? And the problem I think that is going to be a big problem with that we all have already run into, if not too much, is that if you're looking for that extra follow through, right, on a lot of the stuff you end up playing, you're likely going to give profits back, right? Or if you decide to chase, a couple of up days in a row instead of waiting for, a pullback to look to do some buying, right? You're either, one, going to have a more difficult time trying to cash tickets, or 2, just going to flat out lose money, okay? So it doesn't make it, again, even with a plan, it doesn't make it an easy play here because of the type of market we're dealing with. But again, we talk about how this game, right, is a numbers game, and it's all about probabilities. You should touch more winners than losers and come out net profitable if you manage your money properly. You understand? That's the main takeaway. Okay, that's the main takeaway. And you're probably saying, well, how's that different than anything else? Well, it's a big difference to what we were dealing with in 2022. Because you guys know, especially if you were on this webinar weekly in 2022, 2022 was a whole different animal. Okay? There were no opportunities. Okay? Not that's I can't say that. There were always opportunities, but there was a lot more risk in 2022 on the long side because you were dealing with a rigged game. You understand? You had no shot of a bullish phase finding any sort of lasting power in 2022 because the Fed was flat out rigging the game, right? Rigging risk assets to the downside. Every rally gets sold. Okay? So that was 2022. Now what we're in, the Fed is not rigging the game anymore. Okay? As a matter of fact, they've taken their foot off the brake, right? Kind of allowing market forces to work at play here, right? Do their thing. And that's why you're seeing, in my opinion, you're seeing a lot different, price action across the board, right, than what we were seeing in 22. Another thing in 2022, everything was correlated to the indexes, highly correlated to the indexes, everything, okay? No matter what you bought, 90% of the stocks, right, if you bought them, if the market went down, they went down, okay? If the market went up, they would go up. The problem was in 2022, the market went down a hell of a lot more than it went up, okay? As you guys know, That is, again, from October, those lows where the Fed stopped rigging the game, that is not the case anymore. Right? We see a lot of stocks act like they don't even know what the indexes are doing. Right? So that's the difference. That's the main difference in markets from now, from where we're at now compared to 2022. And on top of that, the bears are feeling a lot of frustration and pain, as you see on a day-to-day basis, right? In where 2022, again, I'm not going to say it was easy for them, right? Because they had to stomach these rip-roaring rallies. But if they dodged these squeezes last year, they were okay, right? And by the end of the year, if you remember, what they thought they had the plan. Okay, we hedge when we feel these squeezes are going to come into play, right? Based off too much bearishness. And then we'll add shorts back on. Okay, they thought they had it all figured out, and they did if the Fed was going to continue to rig the game. But lo and behold, they took the foot off the brake, and now that whole strategy, they're getting lumped up off of, right? So there's a big difference in markets from this year to last year in comparison. But again, doesn't mean that we're in a legitimate risk-on bull market rally here. And that's again the risk-on bull market rally. Price action is price action. Okay, but the problem is what we're seeing under the hood, right? The participation, the names that are leading, the names that are being bought, right? That we're seeing in the flow. Okay, it's not risk-on material, as we've talked about on numerous occasions, right? So you see how you need to treat it and react differently in order to survive, even though again we're in a bullish environment right now. It certainly isn't bearish. It's just tough. One more thing I think is really interesting here that I wanted to share with you guys, and again, something we spoke about, but something to keep an eye on as well. Liquidity, okay, and this is because of obviously social media, I think, anyway. It's just amazing how saturated things get, whether it's from gamma to CTAs now, everybody's looking at them, liquidity. As soon as you think you may have something that nobody's paying attention to, it feels like everybody's eyeballs are on them, right? And you guys know from the gamma thing. Remember gamma, was a major force, and it was important. But then just you get the riffraff involved, and they think like you could just generate buy-sell signals strictly off gamma continuously, like you got some magic box, and then there's just too many eyeballs on it. So now what you have is you have liquidity. All right, and let me post so you guys could look at this. There's a couple of things here. I don't want to get too in depth here, but just so you guys see. Okay, this is the Fed balance sheet, right? Now, undoubtedly, there's correlation between liquidity, the Fed balance sheet, and the price action. Okay, anybody who argues QE hasn't benefited risk assets and stocks and speculative assets is out of their mind. Okay, but now, again, with the influx of investors and traders that the government gave a check to open a Robinhood account, right? Now, everybody and their mother all of a sudden knows liquidity inside out. You got 1 million people with threads all over Twitter. Every time I open up Twitter, I see a freaking thread, 65 tweets long on liquidity. I don't know. It's the most annoying thing in the world. Everybody's an expert. It's amazing. Everybody's an expert. But my point I'm making here is that something has materialized here, right? You had the Fed balance sheet because of the banking issue, right? You had a jump in the Fed balance sheet. And if you guys remember, you had the argument. Is it QE? Is it not QE? Blah, 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 right? But there was a legit rally in the more speculative assets, right? Undoubtedly. You had Bitcoin, you had some of the more speculative stocks, the AI stocks, everything, okay? So now some of the legit liquidity experts out there are expecting a drawdown in liquidity, okay? They were, Matt King we talk about from Citi, a guy I follow who I've been following for a while. He's been talking about it, right? And what happened was, you had this dip in the Fed balance sheet, right? Right after some of these guys like Matt King started talking about it early in the week. A lot of the positioning, especially the more speculative positioning, has been trying to front run the short play out of this. Okay? So here's what I'm telling you guys. Between the drawdown of the potential drawdown in liquidity in the Fed balance sheet and CTAs being tapped out on the buy side, right? We all know that. We've been talking about that for a while. We even started talking about it a month ago in anticipation of now, okay? Those systematic funds are pretty much tapped out buy side and become sellers even more aggressively if the price action weakens, okay? But what you have now is you have a lot of this speculative money, okay, that has been trying to catch a short out of this. You know what I'm saying? Like you got a lot of spec money trying to get in off this liquidity drawdown trade and short. You got spec money who's looking at the CTA positioning, okay, and they're trying to catch a short. And you guys know, right? We spend a lot of time, especially if you're a Steamroom member, what happens when a lot of jabronis are trying to play like professionals and the smart money out there, right? They're not going to make it easy. Even if there is weakness, right? Or even if there's a drawdown in liquidity and CTAs have to do some selling, the market gods, however they need to do it, are going to throw some rip-ass roaring squeezes in there. And I think we're going to continue to see that until you get a lot of this speculative positioning that's short right now to lose interest. And they will. Okay? Give you an example. Hedge funds, right? And I guess they consider them hedge funds. But if you look at the CTFC data, right? And you look at the specs and how they're positioned, they're all short. They're all short, right? So you know what I mean? Like they all are positioning for a down move, even with the bullish price action that's out there. So I think even if the market may not find much gusto to the upside, right? Because you need a lot of things to go your way on the macro side to find additional upside from here. You got the Fed meeting, possibly the last hike next week. Maybe what, 4,300-ish on SPX, right? That sort of thing. But at the least, there are going to be these type of squeezes on an interim basis that, like we see today, that I think that's what we got to look for. That's the trade, in my opinion. The least risk trade out there right now without trying to get too greedy. How do you catch that overnight, or how do you catch that to catch a lot of meat off the bone, as the saying goes? That gets a little trickier, but on an intraday basis, I think you can maneuver a little bit more depending on how aggressive you want to be and try to catch these snapback squeezes. You know what I mean? The problem is you can't get too greedy with them. You can't get too greedy. These things, we talk about them a lot, right? These right? So even if the market needs to move lower, you're probably going to see a ton of these. Okay, ton of these, where a lot of the riffraff, they can't sit through this. Don't let them fool you. You know what I mean? They're not going to sit through this. And that's based off, I mean, let me show you. Why am I'm not even showing. I'm just rambling here. I'm not even showing you. I'm trying to explain. Hold on. Let's go here first. Look. Do I have it like this? What? I hate Twitter search. Hold on. Where'd it go? What am I doing wrong, guys? You guys know this before I do. Where is... Maybe I'll go here. Maybe it's under this. Hold on. Where'd it go? I didn't post it? It's gotta be. Oh, you know what it is? Maybe it's just too long ago and it deletes it, right? I'm looking for the specs on the Sharpie positioning, but apparently it's not here. So this is the other side of the spec money, right? So this is the Sharpie, as we call them, the sharp money out there. Okay, and you know, a lot of times they're going to take the opposite side of the speculative money and how they're positioned in index futures. You know, and you got them pretty aggressively long here, as you can see. You know, pretty aggressively long. So yeah, I think just the simple takeaway, right? Even if you can't make the bullish argument, right? Even without the confirmation signals that you would like to see for the potential of a new bull market, you know, at the least, it tells us that there's likely a continuation of a floor being put in on the downside and dips being bought, right? Because of how lopsided it is. I want to show you the spec money more than that, so you guys could see. Let me see. Will I get it? No, I won't get it on that. Hold on. I cannot rely on Twitter search anymore. CTFC. Forget it. Oh, no, that's 100 years old. So here's the other thing too, right? Might as well look at them all. Some of the warning signals we want to pay attention to if the Fed happens to break something that matters. This is the updated one? Yeah. Right? Remember we were looking at this chart the last couple of weeks? Again, I know if your Steamroom members, we look at it continuously. Okay? Does this look like any concern to any of you out there? You know? No concern whatsoever. Okay? And, you know, this can change. You know what I mean? Obviously, it can change. It can change aggressively. It can change rather quickly. Yeah, Twitter search, it always does that, Lincoln. Anytime I need to use it, it's a debacle, Twitter search. I've been on Twitter since 2011. There's no rhyme or reason either. One day you'll get only yesterday's tweets. Then, you know, the next day you can go back 5 years. It's just a debacle. But as you know, we're waiting on what's the next bank to go bust. As we're hearing that, I mean, it's almost a guarantee that credit is going to tighten off of what's taking place in the banking sector. Yeah, I don't see how it doesn't, unless the Fed just floods the system with liquidity again. Okay, but again, what the hell do we know? We don't know shit, you know? So maybe we don't see it, but the smarter money out there that will pick up on anything concerning before any of us. Okay? I'm not saying they predict. Okay? I'm not saying this is telling us what 6 months out is going to look like. Okay? But this is telling us, as of right now, okay, today, with everything that's occurred, the smarter money is not concerned about a thing. Right or wrong, they're not concerned about a thing. Okay? And you may think you're smarter than the smarter money, but the truth of the matter is, until they become concerned, you're going to see the same type of price action we've been seeing, where dips get bought on any scary negative headline with some selling. Okay? The difference is when they become concerned, and you will see this by this blue line aggressively moving higher, parabolic at times of real concern. Okay? When they do show concern, it's the only thing that matters. Okay? Because stocks are going to get hit over the head. And I don't care how bullish you are, you're going to get run over. We've seen it. Right? We've seen it. This is concern. Okay? See January 2022, the start of the year? You see this clean cut uptrend forming? Right? Equity south. Okay? You see here, right? Comes down a little bit. You see this little giddy up? Concern? Equity south. But then October, my friends, which was the low as of right now, okay? Something changed. Okay? Something changed, right? You see new highs, new highs, new highs, new highs. And you start to see, okay, what has changed as time has gone on, right? The central bank liquidity, where there's been a drain, right, all throughout 2022, stopped going lower and hasn't gone lower since October, right? So the point I'm making, though, is if the money out there, right, that knows and knows a lot more than you and I and has the resources to a lot more than you and I have, okay, if they get concerned, you're going to see this, do this, and equities will sell off. So you will see it start to materialize here. Okay? The longer this lingers, or even more so if it starts to roll over, it's signaling no concern. So, and listen, we could come in one day and everything I'm showing you, everything I'm talking about now, right? It could be something different, right? We could come in tomorrow and Schwab, there's a run on Charles Schwab, which is a lot more important than FRC or SIVB. And credit markets start to get really anxious about it. So it could change like that. But that's the best we can do, is just keep tabs on the information at hand right now, right? And react accordingly. So, because again, the reason I say that is this, and look, this is from Goldman. This is with VIX. Okay, so equity volatility is in light blue. And here are credit default swaps in dark blue. Like VIX, why is there no concern in a VIX? There's no concern out of swaps either. right? And you can see like even throughout time when swaps aren't concerned and there's a pop in VIX, it comes right back down, right? But then if there's a pop in VIX and credit swaps start to show concern, that's when you get these big moves in VIX. All right, so that, obviously we've been looking at that each and every week on here, and that's where she stands as of yesterday. I think this is yesterday. What else was the other thing I wanted to show you guys? I wanted to show you guys spec money. That was the other. What's another thing that hold on. I would have came prepared, but I had a keyboard go under with a cup of coffee again. It wasn't even that big of a large cup of a coffee. It was a coffee with a cover, and it dribbled into the keys. What was the other thing? Hold on, I wanted to show you guys quickly before we start coagulating a little about names. I'm drawing a blank. Oh, CTAs. So there's big talk out there right now. Okay, a lot of people talking about it. About those trend following and systematic fund following funds. Okay, they've done a good amount of buying, right, over the past few weeks. The CTA crowd is pretty much tapped out for the most part, meaning they're not going to aggressively start buying. Okay, they're more inclined to sell, but it gets aggressive if the price action starts to roll over. You understand? So if we start to sell, if the market starts selling off and gain some traction, you could see it accelerate over the short term because of these CTAs unloading longs that they recently put on. All right. So again, it doesn't mean the death of the market and new lows. If you remember, same instance here. You guys remember we were talking about it here. February. Same setup. Okay? And, it led to this. And at this point here, they started buying. They were all in short already. So it wasn't a complete catastrophe. So that's the risk from that crowd now. But what's interesting, because of the selling of VIX, because VIX is so low, you have the volatility controlled funds. They actually do buying if VIX goes lower, right? So you see it a lot in the price action. When VIX sells off, right, you see it lead to a rally in the S&P 500. A lot of times because of these funds. So there's some risk for pressure here off CTAs. Okay, certainly not bullish. Certainly not bullish. But it's a little different of a trade here too, because here you kind of had a nice open window. You didn't have earnings. You didn't have much to get in the way here. Right? So if you saw weak price action, you kind of could have played off that momentum. Here, you could get some weak price action, and then all of a sudden, right, Meta knocks the cover off the ball for earnings, and flips that momentum. So that's the risk. That's the risk. Somebody, I think, was asking, what's this orange line? That's the Fed balance sheet. Right, and now Amazon. But see, the problem here, Sahil, is I just don't see it, the upside. In other words, there's got to be more participation for this market to find some legs to the upside here. You know, it they can only buy Meta, Microsoft, and all these names so much. You know what I mean? A couple of days of buying, and these things got to rest. A lot of these things have been moving already for a while. Right? It's not like they just started moving. Like, look. So, unless they start buying other things, it's going to be more choppy, if not bearish, price action. Which makes it tough. But listen, I know sometimes it's a waste of my breath talking about this stuff because you guys want to play. You know what? I realized that over the years, I can say, oh, it's a time to you want to be careful. You want to just day trade. Some people they don't give a shit. You know what I mean? Right? It goes in one ear out the other. Tomorrow they're gonna play Apple earnings and weeklies, and they couldn't give a rat's ass what I just said. But the smart thing to do here, right? The prudent thing to do right now, because of earnings and the risk of it, is to try to take advantage of intraday setups whenever they present themselves. So what I mentioned earlier, right? Like what I like to do in this type of environment off this setup, okay, is things got to line up a certain way for me to even try to take advantage of. Okay? In other words, I rarely, unless it's like a great setup off an extreme, I really am going to come in, let's say, this morning and know that I'm going to buy something. All right, I'm getting long this right off the open or some shit like that. Okay? For me, I come in this environment when I'm, strictly focused on just trading off the momentum because I need momentum, okay? If this is going to be, let's say, a choppy environment, it depends on the action, right? Like I know it's earnings season. I know there's not as much of an edge off the sweeper activity to begin with, okay? So I got to see, a sweep or a bet or even more so multiple bets that I like for me to even try. Otherwise, I'll sit there all day and not play anything. And what I've realized is the days I sit there and end up not playing and not doing anything, there really wasn't much to be done anyway. You understand? The action was telling me there was no momentum out there to begin with. So even if I forced a trade, I was wasting my time anyway. And then, if there was a day I come in and, maybe I'm not even expecting to do much, but sweepers are excited for whatever reason, playing certain names or a name. And, I'll end up playing that name without even any playing or having that name, even heard of that name before, is what I'm trying to say. You know what I mean? So I kind of let the action force me into making moves. Now, don't get me wrong. Sometimes I get antsy. I'm sitting around. I want to play. There's nothing to play. There's some action that comes in, right? Probably action I shouldn't be making a move off of, but I roll the dice anyhow. Of course. You understand? But I'm not going to do a lot of that because the God's honest truth is when I do that, the majority of time I end up getting stopped out for a loss or a scratch, and it was a complete waste of time anyway. So I'm not going to lie to you. I do that. Okay. But I try not to do a lot of that. Okay. And I know I'm forcing it. You know what I mean? I know I'm forcing it to begin with. But at the same time, I'm not gonna let that stock, I'm not gonna ride it lower. You know what I mean? I'm gonna stop myself out probably even quicker than I usually would because I know it's a forced trade. So example, there have been plenty of days, especially since earnings season has started, where I haven't traded at all during the day. Okay. Today I traded two names, and today the market was a big help. But today I had two. I had one really nice winner. The other one I sold too quick. But there was one sweep. You guys probably know the name I played immediately, right? So this name caught some action a couple of weeks back. Oh no, a week ago. Made the top bet list we put out for top sweeps on the day. Caught another nice sweep this morning, literally right off the open. And again, there's been not much action at all out there, unless it's one of these big names. So this name, and you talk about getting lucky, the help of the market. You think I had any clue that a name like this was going to do this today? You know what I mean? And I played this name the last time, like I said, I think it was a little over a week ago, that it caught action, and it had a pop in it, but nothing dramatic. Okay, but I made a little bit of money with it. Okay, I had no idea whatsoever that the stock was going to do this today, off the action it caught. All right, and this is like a 5 minute. Doesn't even do it. Like, look at this. And the beauty of it, twofold. One, you have a rip off the open, straight up, okay, and then it just sits up there. You know what I mean? So like, you had time all day to wherever you want to pull the plug, right? Race, stops, whatever you want to do, right? So there's a lot of luck involved. You know what I mean? There's a lot of luck involved. But it caught action and, ripped, performed well. The other name I played today was the name I played yesterday. This thing caught action yesterday. I scalped it yesterday quickly. It had a really nice move yesterday, but I was really too quick because yesterday was a disaster flow-wise. Here, that was yesterday's move, and this is today's move, right? And again, I'm playing the equity, so it's like a whole different ball game. You know what I mean? As opposed to options. Okay? And the point I'm making, though, and let me show you, I'll give you an example of yesterday. I played this one. What is it again? What's the other? Oh, boy, I'm drawing a blank. Hold on. I gotta need your help again. What's the other stock? The EV stock. It did in another EV stock that caught action with the LCID. With an R. Amazon owns a piece of them. I don't know if they still do. Thank you. And this is the other name. I played it yesterday. Didn't really do too much. Today, I had a little bit of a move. So this caught some spec action too. Right? Both of them, again, multiple sweeps. Lucid happened not to even catch earnings, but there's a million EV names. But again, I'm not showing you guys because again, you might be missing the point. What I'm showing you guys is today, right? Because of luck and the strength of the market, I'm sure I happen to do well, right? Really well with one name. Okay. There has been a lot more of not doing anything during earnings season. You know what I mean? Not doing anything. Like a lot of times, I'm trying to think of a name that there hasn't been enough action for me to even press a button off of. But I'll give you an example. What did Lucid had a decent move yesterday. I played, but it was I scalped it too quick, so that doesn't count. I want something where I was expecting a little bit more of a move, and it just didn't move or went down. I'm trying to think of. I can't think of anything these days. These names. But yeah, you understand the point I'm trying to make is that this is not every day. This is not an everyday thing. You know, this besides luck, there's obviously luck involved, but what I'm saying is the action today kind of determined, right, that there was going to be some momentum out there today. Where other days you don't see much action and there's just no momentum. There's just, you know what I mean? There's nothing to play. And you guys have seen it in like biotech. I haven't played, those biotechs. I hardly play them because I told you guys I don't feel comfortable holding the equity in as a day trade because if I get caught in an FDA data halt, you could get mangled. But you can see, right? There's been momentum, right, in those biotechs. Hasn't been in everything. Hasn't been in the whole market. So you're kind of waiting for those type of opportunities to align, and you're looking to play off the momentum. But that's what it is right now. It's strictly momentum. It's not, it's not the good old days that I like. I love it too, where you buy the name because you like the name or you like their numbers or you think you found a hidden gem. It's just that's not the market right now. Unfortunately, that's the difference between a new bull market and this bullish phase that we're in. Right? You're looking for momentum. You're looking for momentum. That's it. You're looking for momentum. That's the difference. In the new bull market, you want to build positions in new names that are seeing accumulation, right? You find, like we said, you find a new stock that not many people are aware of, but you got sweepers accumulating on a daily basis. You realize the story, they got a sexy story, they got crazy growth. That's we are so far from that right now. You understand? We are not in that market right now. You realize that, right? TGTX. Oh, that stock's been unconscious. That stock, forget it. There's been a lot of people that play this thing that I know of in the room. It's been nuts. This and this. These biotechs. VKTX. Look at this one. But it's not, that's not, it's not bull market. That's a new bull market. At least that's the definition that I've known throughout my career and everybody I played the game alongside with. This is just momentum, and they're crowding into safe names, right? You rather own McDonald's than, being in cash because you're worried about inflation or a run on a bank, right? Or a Merck. And they're crowding into these names. Crowding. Absolute crowding. And now the mega cap tech Nasdaq names now more than ever. So what do you want to do too? You're gonna buy mega cap tech here now with literally on the fund manager survey, BOVA labeling the most crowded trade. You're gonna start building positions in mega cap tech or strong earnings. You couldn't, if you put a gun to my head, I couldn't do it. I don't care if you guaranteed me they were going higher. I could never do that. That is the total opposite of my goal in this game. You know what I mean? The total opposite. The total opposite. But, the good news is there are other things around that the bullish phase could possibly move into. Like you see these things, look, people thought they never would come down again, right? You had some crowding there into the highs recently. You got a little pullback here. Apple. I just, again, there was a decent time. What was it? A month ago now? These weeks fly by where they were really solid tactical trades. Like you literally could have bought every dip in Meta, right? Or where was that? Off that pullback. Here, right? Like right off here, okay? Like you had a nice stretch here where you could have bought pullbacks where it started catching flow off this little breather and took advantage, right? I'm not even talking about swing trade. I'm just talking about on an extremely tactical basis, right? You could have stuck with these names and bought dips and made a lot more money than you lost. Like kind of like what Sahil said, train left the station. Like this is done with now, This is done with. And when I say done with, I'm not even talking about price action wise, right? I don't have a crystal ball, but you have no edge in this name anymore. You understand? It's crowded. Everybody and their mother has flocked to these names now. And a lot of these names, because the damage has been done in a major way already, you know what I mean? People saw value here. Like the total opposite, right? You went from crowded now where nobody could touch these names because they buried everybody. So, but again, it's the moral of the story is it's momentum, right? That's like you see this too, right? This had momentum and it kind of died, right? This had the momentum off the lows. Like everybody thought Netflix new highs. Oh, Netflix is back, new bull market, and then it gets stuck once it gets crowded. So, but it's tough. It's a tough cookie, this game right now. Tough cookie. And unfortunately, listen, I know a lot of you can't day trade or don't like to day trade, or day trading in options is even more difficult, right? Because it kind of limits you to only the more active names. That's why a lot of people crowd into the mega cap names, right? Because the other ones are so thinly, a lot thinner traded, and especially for day trading purposes. But I'm sure people are going to get caught in this mega cap trade and get lumped up. Undoubtedly, it's only a matter of time anyway. It's only a matter of time. Yeah, microwave steak is right. It's tough. And listen, again, for the bears, I think it's tougher than anything, right? For bears, forget it. Forget it. Like if you're long only and you think this is tough, you should go talk to a bear right now. Okay? Because they are pulling their hair out of their head. But you understand that's the purpose of what's taking place here. Okay? That's the purpose. Where am I? See this? Oh, you know what I like to do to you, Twitter search? This is something else. You know that? Yeah, well, maybe I can't go far back. Oh, now it comes up? Look at this. Hold on. No, maybe you can't go. Hold on. What is this? It doesn't go back far enough. That's the problem. So useless. But again, I was gonna go show you the sentiment thing there. CS had some cool tactical signals out. Right, so that's kind of their aggregate like sentiment indicators. Like that's where they have us at right here. You know, so not at the extremes that we've seen, but certainly not bullish. You know, so it wears out bears. It wears out the bears, and it's doing a great job of that. CTAs are there. Nah. It might be under here. Hold on. I might be able to find it under here. Oh, I could find it under here. Hold on. I don't know why. I mean, we looked at it already. But now, you know when you get fixated on things where you just want to... Nah, this is too far back now. I think. Yep. So anyway, what names are you guys playing with here? Any names off flow that you guys have been? That's not it. Where could it be? This thing that you guys are trading? Oh, I went too far back. Yeah, and you know that's again right. I mean, you don't even have to, Ani, stick out your neck and try to front run it. You know, like the anti-VIX or the tactical set. Oh, here it is. Am I blind? Oh, the tactical sentiment indicator. But you know, just be on alert for a squeeze, right? I mean, that's basically like you have a higher probability of seeing something like this, okay, when those tactical sentiment indicators that Ani's mentioning are flashing bullish, right? The timing for a potential swing trade is not, again, not as easy as if we were in a real bull market. As you guys know, in a real bull market, we front run those signals. We don't even let it get too bullish. We want to be really early, we front run it, you know? But in a market like this, you know, you kind of want to see the bullish signal and see how things shake out, right? See the momentum start to turn. See some buying coming in flow-wise. You want to see some confirmation to light the match because this market's, you know, a lot tougher, right? But when you see price action like this, okay, it's usually coming off bullish tactical sentiment signals, right? And they lit the match. Like all these. And let's take this, right? Because this has been even choppier. But you see these here? This, ping, 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 right? Like it stopped there and did this, only to just retrace and go lower. A lot of times, the only reason it does this is because players are leaning on, you know, on a tactical time frame a little too aggressively on one side, meaning the short side. Right? So you had weakness here, you had breath washout, You get short-term sentiment signals, and then once the momentum starts to turn, the match gets lit, you get a pretty aggressive squeeze. It fell on its face, but there's still a kind of what like we've been discussing in the past, right? If you're going to play the long side, okay, and you don't have major sentiment on your side for a squeeze, like this is the one place you want to get in the middle of on the long side. That's where you can get that juicy momentum in the price action, because everywhere else is difficult, right? You've seen even prior to that, we would be up, and by the end of the day, we'd be down. So, but and those are the trades. Like name wise, I tell you, I see you guys throwing some names. I don't know. I don't have one name that I like right now. There's not one name that I like. There's not one name off action that I like. Okay, like here's an example though. I like this name. Okay, I like it, but you know what my excuse is here, right? I mean, there's only one excuse right now. You have earnings right here. You know what I mean? Okay, you could ignore that, right? You could pretend like, oh yeah, forget about earnings. It's catch and flow. But the reason it's catch and flow more than likely is positioning for earnings. That's the problem. Okay, remember we talked about snow, right? With the put sellers and all. And okay, yeah, maybe you would have made some money, but what about if Microsoft, the cloud numbers, wow, what about Amazon? Snow's going to pop off Amazon, no? I don't know the cloud. Oh, yeah, look. 153. I forgot about that. Amazon probably just as important. But players were positioning in snow, right? If not for snow earnings, more than likely for Microsoft and Amazon cloud numbers. I didn't even realize that till some of you pointed it out. Look at this pop. So let's say you wanted to put on a bullish play on the cloud numbers from Microsoft and Amazon, right? You would play snow. And they didn't really play calls too much. They sold puts, They sold puts and took the money. But if Microsoft and Amazon reported shitty numbers out of their cloud division, right, the stock would do the opposite. The point I'm getting at here is I don't have anything. Sometimes I say, is it me? Is it just me? I don't have anything, any name that I'm interested in. Forget about excited. That I'm interested in. I'm talking, again, not trades here. I'm not talking about trades. Okay? I'm talking about swing trades, positions. Not one name, especially now. Right? Like you guys have heard me, I talk to gold miners. Right? That's when if I'm most excited about gold miners, I got news for you. It's not a bull market. You know what I mean? Like if I'm the most excited about gold miners, it's not a bull market. At least you got a little dip here, a nice little dip in gold miners. Little breather. Needed it. Probably could use some more, to tell you the truth, but I don't know how much more. What's gold doing? That's been hanging in there, right? Same thing. I bought a feeler for snow betting on Amazon. Yeah, I didn't, Dan. I'd even honestly, a couple of you guys brought it up a week ago in the room that it's probably not even a bet on snow numbers. It's probably a bet on Amazon and Microsoft cloud numbers. I didn't even realize it. I will trade any name that trends up, catching. Oh, you like buying off a niner pullback in an uptrend, is what you're saying, Ani? Oh, miners. Those are miners. Those are miners. Yeah, look at that. Into downside niners there. This one's a good one. WPM, right? All right, but let me ask you a question, okay? Because I get it. That makes a lot of sense to me, especially these names that have been seeing a lot of flow. But what what do you mean by trading them? You're building position here? You're holding it? Oh, off the open. No, you're talking about tactical then, right? You're talking about quick trades. Yeah, you're talking about quick trades on here. That's what you're talking about. I agree with you, Ani. I agree with you. But see, what you're saying, I know, like, and that's your style too, right? That's more your style. You've always been like that. Even in bull markets, that's your style. No? You got to understand, Ani, the majority, again, I'm guessing, but the majority of people that come onto these webinars they don't look at things as tactically as you do. Yeah, see, 2-3 days. They are not looking at the market like that. Okay, they are not looking at the market like that. You know, they're looking for legit moves. And I know, that's why I sound like a broken record to you, Ani, but, I know you since we're in diapers, But the reason why I talk about that a lot on here is because I know a lot of people, because a lot of times I would talk about tactically trading when I used to first do these webinars and bring up names that, like yourself, I would be out of them the next day, okay? And then I would, the next week or 2 weeks after, somebody would bring up that name to me that it's down, and you know what I mean? Like, I understood, like, they didn't realize what I meant by being extremely tactical. If you're looking at that name 2 weeks after it popped, you're not understanding what I'm saying here. And I think that's, a lot of people right now, you see it even just in the indexes, right? What's everybody talking about? Market bottomed in October, okay? And what they mean by that, the bulls, is that almost like you should go all in to everything because we're in a full runaway train bull market. Okay, I'm serious. The bulls, okay, that's how they see things. And don't let them fool you. They are getting hit over the head. Okay? Because those same bulls that were swearing, okay, about the bottom in October in a new bull market, you know what they were buying? I kid you not, financials. They weren't buying tech. Okay? They were talking about the new bull market was being led by the financials. Remember? Higher for longer interest rates, all that crap. So that's the problem when treating this like a new risk-on bull market where almost everything is going to go up with the indexes. That's not what's going on right now. Okay? If you bought those financials, you got lumped up, even if you're right about this bullish phase that we're in. And you think about even the names that are going higher now, this Amazon, okay, we use this as an example over and over again because a lot of people are going to use it now, right? The October lows were over here, right? Yeah, here. Okay? So if you're buying Amazon, you're in a new bull market, okay? You're telling me you're going to hold through this menagerie? Oh, yeah. And you decided to hold into earnings here to see what? This thing's not even up. This is hysterical. Oh my God, I can't. I don't even live. Oh, Jesus. What? I mean, is that perfect timing? That's perfect timing about the frustration I'm trying to explain here. You know what I mean? Like this stock, here's the October lows. Okay, where the bulls claim the market bottom, then we're in a new bull market. Right? You would think if we're in the new bull market, Amazon would at least be up from that. It's amazing. So that's the point I'm trying to make, guys. You got the bulls talking about a new risk-on bull market, and you got the bears that are talking about a crash. And what we have is a menagerie in between, right? That's what we have. This is what we have, okay? So to Ani's point, you have to put your tactical trader cap on and figure out a way to be extremely tactical. You have to. You have to. You can't rely on finding the one stock that's going to do this. You understand? It's Nvidia, it's Apple, and then I can give you a list of 60 other names that you would have pulled your hair out of your head. You know, you have to trade them all. You have to trade them all in this environment. You got to trade. You got to trade, right? We talked about like almost like you treat it like a DraftKings account, okay? Like you're betting $500 a ball game, and you're looking to finish over 500. That's how you got to treat it. Okay? I had a winner today. I made 500. I had a loser tomorrow. I lost 500. I stepped on a GLNG and got lucky. I made $2,000. I have a loser tomorrow. I lost 500. That's how you got to treat it. And forget the big ticket. Yeah, but you see, Praveen, you see what I just explained? Like for me to take that approach and to hold much of anything overnight doesn't make sense in options for me, right? It doesn't make sense. If I'm going to treat the game the way I just explained to you, okay? If I'm going to treat the way I treat this game just like I explained to you, okay? What's the logic in taking on that extra risk to hold overnight? It defeats the purpose of everything I just said. It's just, you know, it's like, I mean, Praveen's right, it's just not worth it. It's not worth it. Yeah, but those are, you got to understand, those are different animals, right? Praveen, that's the point you're making. Those are QE bull markets, man. You know, those are, you can build a position and see a rip in a straight line for multiple weeks, months sometimes. You know, that's a different animal than what we're dealing with right now. Completely different animal. And as a matter of fact, 2022 was the total opposite of that animal. You know, now it's almost like you got forces tugging on both sides. Oh, we rally for 3 days. Here they come. They're going to pull the other side. Whoop, we sold off on FRC going out of business news. Yep, here they come. They're going to pull up rally time, right? I don't know any other way to put it. You got to treat it like a DraftKings account. But the good news, and you guys know I wouldn't say this if I didn't believe it. You guys know that, those of you who know me, Okay? Because you know me, I have no problem sitting in cash. You guys make fun of how conservative I can be at times at this point in my career. But it's worth playing right now. I truly believe it. It's worth being tactical and trying to be patient for certain setups. It's worth it. In 2022, I told you every week it wasn't worth it. It's not worth it. It's not worth it. It's worth it now. That doesn't mean you're not going to have losers, but you should have more winners than losers. You understand? You should have more winners than losers. That's the difference. But this is not a risk on fresh bull market. Hell no. Because, and you know, here, I'll tell you this for when we come to that time. Okay? Because when we come on this webinar, this same type of webinar, weekly webinar, and I spend the first hour rambling about just the topic I'm rambling about now, okay? If it's a new bull market, we will be talking about names, 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 and more names. Okay? That's how you'll know. We won't be spending any time on what I just talked about for an hour. I will come on the webinar. We talk probably 5 minutes about the overall market and the setup, and then we start diving into names and what names are being accumulated, what names are breaking out, which names are potential new leaders, which names are catching the best flow with names, 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 and names. When you hear, the more you hear me talk about individual names, the healthier the market is. Yeah, that's it. Yeah, I mean, you think we were talking about credit default swaps, Praveen, right? I mean, we want to talk CTAs. Like, I didn't give a rat's ass about CTAs in a bull market. I kid you not. Like, listen, if CTA positioning was lined up, don't get me wrong, in a bull market, oh, that was a good setup. Okay, but if CTAs were neutral, I couldn't give a rat's ass if they were sweeping up names left and right. You know what I mean? When they were sweeping up growth name after growth name, and the top bet list had 8 to 10 different growth names on it a day, it wasn't even worth putting a top bet list out because of the action, how much action was out there. You know, that stuff just gets, all the other stuff gets in the way when it's a healthy bull market. The less you pay attention to, the better. All I pay attention to is sweeper activity in a bull market. That's 90%. You know? But we're in a whole different world, my friends. We're in a whole different world. You know? A whole different world. And what's crazy is, you know, if we were seeing the confirmation in individual names and the flow, you know, you have a decent setup here positioning wise. I mean, you got a lot of cautious money out there, but you know, they're cautious for a reason. It's really, you know, it's a shitty setup right now. It's a shitty setup. You know, but that's all you know in the future. Okay, you don't need me to tell you, oh yeah, it's a new bull market, it's healthy. If we spend the majority of the time, you guys know from the past, if you're around, if we're spending the time on individual names, okay, you know it's risk on, legitimately. All right, when we're looking at Nvidia, Amazon, and Apple, and then we're going to talk macro and credit default swaps, you know. What happened here? Conference call, by the way? You know what's funny too? Did you saw the crowding in Amazon today, flow wise? It was hard to believe they're gonna pay these guys, but was that even a? Yeah, I guess that move was AWS slowdown. Oh, that's not good. Oh boy. Wow. Interesting. Interesting. Jesus Christ. Huh? Earnings. I tell you, earnings are nuts, right? Can you imagine, like, you look at Amazon, let's say you took a shot, you played some calls, right? You listen to the webinar a little, you go to the bathroom, you come back out, and you see this. Oh, Intel? I thought Intel was down. Intel's up? I thought Intel was down with earnings. Oh, yeah, look at that. That's a nice pullback there, too, for a little bounce. Snap reported. Snap it. Is this every quarter, Snap? Honestly, keep an eye out for call sweepers tomorrow. They buy it all the time. Look what they do. Here's the quarter. Ready? Last earnings, gap down, sweepers came in, ripped. This quarter, earnings here, huge gap down, sweepers came in, ripped. This is like every quarter. Look here. Quarter earnings, disaster. Gap down, bounce. And net, right? Look at this stock. Talk about hockey stick. This stock shit the bed for the last 6 straight quarters. And look at it. Hockey stick. And now it's down here again. Hockey stick. Yeah, Snap. Can you believe, what was the high on this? $84 on Snap. Can you imagine in the go-go days? $84. Snapalicious. They were still losing money then. My goodness. Anyway, we did a lot of yapping here. I apologize for rambling. But when you're not in a bull market, that's what you do. But anyway, moral of the story is, seriously, as tactical as you can be, you know. For members, Ani kind of hit the nail on the head. You get a little tug. You have the anti-VIX, flash bullish. You get tactical sentiment, flash bullish, right? You look for something to play intraday for a squeeze. You know, the market starts squeezing, it could have a little gusto. They start buying stuff, there's some momentum there. You know, that's where probably your most winners are going to come from. You know, but yeah, for me, you know, it's all about the flow. The more they're buying, the more, because sweepers equal momentum to me. You know what I mean? That's the true edge of sweeper activity. The more sweeps, the more momentum. So if they're sweeping calls, you know, I'll look to get in the middle of it. If they're not, I sit here twiddling my thumbs. Yep. Exactly. All right. So anyway, you guys, that's what it is. We'll see how the rest of earnings season shakes out. And again, we got a couple things to keep an eye on. Maybe, you know, the backdrop starts to loosen up. What are we in? We're in April, right? May, June. The summer might get tricky, but we'll see. We got time. Have a good night. Have a good rest of the week. I'll see the majority of you mañana. Have a good night, everyone.